with the leaders. In terms of, we have three eminent names here. We have Mr. Pramod Jain, Mr. Shiv Kumar, and Mr. Sriram, who are three people. I'll take this opportunity to just speak 2 lines about each of them. Mr. Pramod Jain is the Senior Vice President Officer and Taxation Officer at the Flipkart Group. He's been there for over 10 years. I met him once in his office, and he was about to introduce me to one of his colleagues by saying, how long I know Badri. Then he paused suddenly and he said, no, let me tell the number of years, because you'll start guessing my age after that. So, that's how. You'll have a way, he will have a way to kind of make every moment, every answer that we are going to ask him in the next 1 hour very lively. He has rich experience over 30 years. He's worked with Deloitte, PW, EY, Xerox and Dell. In fact, my first interaction with him was when he was with Dell. I'm not too sure if he recollects, but that was the first time I spoke to him. He's a regular speaker, and thank you, sir. Thank you so much. We've reached out to him many times, but yes, in his busy schedule, this time he made it. Thank you very much, sir. So please welcome him onto the stage. Then we have Mr. Shiv Kumar. He's the CFO of Tata Consumer Products Limited. Our previous co-chair, Arun was his colleague. Arun was working with Shiv Kumar. So Shiv Kumar has been in the controllership and the CFO role in the Tata Group. He's been with TCPL for over 20 plus years now. And he was the one who led the entire implementation of GST for Tata Consumer Products. So please come, sir. Please welcome him on stage. We have our third panelist in Mr. Sriram. Sriram, thank you so much. Sunil couldn't make it today for whatever reasons. And last minute, Sriram was kind enough to kind of say, yes, he will step in. Thank you so much, Sriram. Please come. He is Vice President, Wipro Limited. Please come, sir. Over 25 plus years of experience. He heads controllership and tax at Wipro. If I may say so, all the 3 people that we are seeing on the stage now are, for want of a better word actually, leaders in policy advocacy, if I may say so, as far as the government of India is concerned. I limit my discussion to indirect taxes today, but in indirect taxes, they are the 3 people who I very confidently will tell you are responsible for a lot of changes that have come in the last 5 to 6 years in the GST that we can think of. So with this, let me start a panel discussion. Sir, in the first half, we heard Bala. It was a wonderful discussion with him. He very succinctly, explained the 3 pillars around which the GST 2.0 revolved. He said the first is the structural reforms. Second being the rate rationalization. Third is more the rationalization or changes from a procedural point of view. So taking the second one, which I said, rate rationalization. By and large, that is at the top of the list when we talk about GST 2.0. So in that process, if I may say that, GST, if the parameter for evaluating the GST thus far, 8 years and what we are seeing in 2.0, if I say, sir, this question is to Sriram, I'll go with Sriram first. It is, if we say the parameter of evaluating GST is digital administration and real-time reporting, where do you see we are in the last 8 years and with the changes that have come in as part of GST 2.0?
Sure. See, if you look at the journey over last 8 years, right, the law, I would put first 4-5 years, then probably last 2-3 years. First 4-5 years was largely about getting used to the new law, right? But if you look at the changes that have come in the last 3-4 years, especially after the IRNs being introduced, right? A lot of this digitalization, we started seeing the benefits coming through. Now, are we there yet? Probably the answer is not yet. But are we today I would say we are 70% into the journey. Coming from a practitioner perspective, the kind of data that we have today, and the structure that we are able to get it from the system, now a lot of automation can be done from the company side to reduce the effort on compliance. So I think we are on the right track. And if I look at globally across, the countries which have implemented GST structure 10, 15 years back, if I look at the automation that's happened there vis-a-vis compared to what has happened in India, we are far ahead. Most of the countries are just in the process of, getting the IRNs introduced. Most of the Europe is going through it between now and the next 5 years. So if I look at independently India, maybe I would say 7 on 10, but if I take a global context, we are far ahead, as compared to any of the other jurisdictions that has been matured even under the GST norm regime.
Okay. Interesting. Sir, Pramod, if I have to change the parameter, which we kind of heard from Sriram on, from broader digital administration and real-time reporting vision to, let's say it is, transparency and growth, digital administration, right? The transparency and growth. How would you see GST has evolved in the last 8 years?
I would say to understand the evolution of GST in last 8 years, let's go back a little bit and understand our lives as tax professionals before GST. And I keep on saying, as a student of chartered accountancy, I started my career with reading excise and sales tax. In early part of career, service tax and VAT. And then GST. And all along, you had to deal with multiple tax rates, multiple interpretations. Every law would have their own interpretation, every tribunal, depending on the state, depending on the High Court. Maintaining physical copies to claim SENVAT credits. That was the life. C forms, F forms, waybill, road permits, and this is what used to keep a lot of tax practitioners also busy and the tax professionals on the corporate side also. With the cascading effect of taxes. Tax function was a highly critical function in a lot of companies because no supply chain could be set up without the consulting the tax team, because they would tell you where there is a tax arbitrage, where should you set up your warehouse, where should you do the interstate billing. Now, moving on to GST, life has become much simpler. Now, while many in the room could keep on saying that this is not done, this is not done, and that's where I wanted to start with where we were before GST. Now you have a single rate of tax. There is no paper filing. Everything is paperless. There is no, so you have to pay all your taxes online. You have to file all your tax returns online. There is a mechanism for everything, which brings in a lot of transparency. And this has been, so for GST success in India, I would give a large part of the credit to GSTN, right? How they have gone about building a robust infrastructure in helping the taxpayers. Now, if we look at the other benefits also, this has led to a huge formalization of the Indian economy. Now, today the formal economy is more than 60%, which probably used to be less than 25%. And that's where, you are seeing a lot of collections. Now, the scope for evasion, scope for, doing something wrong is going away. Look at how the GST reconciliations, PR versus 2B has been fixed. How IMS is going to make our lives easier. Now, I know many of you in the room would have a strong view against IMS, but if you believe me, this is going to make the lives of tax professionals much easier. And I welcome all the contrary views on that. But, right, somebody giving you a credit note and you not acknowledging it is ultimately going to reconciliation issues, is going to lead to audit issues. Now, if we have achieved 80%, so let's first enjoy and celebrate what we have achieved over the last 8 years. And while there will always be something more to ask for, more to represent, more to advocate, right? But in my view, as a tax professional, if I have to see and if I have to compare the journey, in a complex country like India with different political ideologies, with different vested interests, conflict of interest, what we have achieved is not a small thing. And I'm hopeful with the GST 2.0 kind of vision, the kind of bold reforms which have happened, an intermediary kind of a problem which a lot of people had been talking about, suffering the pain, whenever the taxation was happening. And every time we used to meet the finance ministry officials saying that why this intermediary is required in the book. And the heartening thing was, many of them also used to wonder why it was brought in the statute, first of all. And some of the new officers used to ask, you have been coming to finance ministry for many years, do you know why it was brought? What was the problem we were trying to fix? And nobody had the answer. So that was the state of affairs. Good to see that finally it is going to go away. Good to see that some of the post-sale supply discounts are going to go away. But sometimes, yes, you feel that the amount of time the e-commerce gets mentioned in the tax laws, whether you want to be a center of attention or you want to be a center of envy. Now there is a special chapter or special section on e-commerce, GST, TCS on e-commerce. Income tax guys thought they were left behind. They also brought in 194O, right? TDS on e-commerce. And now with all this, new GST 2.0, there is too much of reference to e-commerce for anybody's comfort. So,
True. Sir, just to add to that, the revenue of GST used to be about 3.75 lakh crores for the whole of 17-18, as in 9 months of 17-18. Today, we have surpassed 2 lakh crores per month. So, anything on that?
this is again, and that's what has given the courage to the government to come out with such drastic rates reduction. If you look at again pre-GST, the average tax we were paying, excise, VAT and all put together, maybe was 35 to 40%. And today even 80%, 18% also we are saying, can we move to a standard rate, single rate, right? So that's the, the next level of aspiration we are going for. But we were all okay to pay 14% excise duty, then 12%, 12.5% VAT with the cascading effect. Certainly this, whole collection mechanism, and again, I'll not hesitate to give a large part of the credit to this whole digitalization that has happened, how GSTN has gone about, making the lives easier, tracking those tax evasions, how some of the fake invoicing, things were caught in time, they were fixed. Now, you may be unhappy with how tightening of this online registrations have happened. Maybe the tightening has happened a little too much, but something was required. Now, one of the officers only was telling me in one of the cities in Gujarat, after they implemented this biometrics, there were 4,000 people who had filed an application. They were called for biometrics and they never showed up for a month or so. And the only trick they were using was that because a lot of those applications were made in the names of their maids, drivers, cooks and all. So they'll say, oh, he's the owner of this firm. They said, good. Before we take the biometrics, they will tell him, do you know what you are giving your biometrics for? And what can happen if you are found to be doing something wrong? And 4,000 people didn't just show up for registration. So some of that tightening was required, but maybe it got a little over-tightened. It is causing pain to a lot of industries, to a lot of trades. It is delaying the registration with all the other associated unethical issues. So we look forward to that. Maybe some relaxation for at least some whitelisting for some companies could be done.
Sure. Thank you, sir. Thanks. Shiv, for you, in the same breath, we heard his notes on digital administration and real-time reporting, him on growth and transparency. If we shift the parameter to kind of cascading impact in GST and efficiency that GST has really brought in, what would your notes be on the journey of 8 years?
Yeah, I think GST itself was a historic event for us. And I think it removed, pretty much most of the industry had the cascading impact, depending on what product they were in. I think with the introduction of GST, clearly a lot of the cascading impact was removed. And I think, and I can tell you, TCPL was also one of the beneficiaries. As organizations, look at their supply chain and try and look at economies of scale versus being more and more localized. In the previous regime, you would find that tax paid in one state was not available as a set off in the other state. And you always had manufacturing in one state and sales in another state. And when you are widely spread, like a large FMCG player, you would sell in pretty much all over the country. Whereas you end up manufacturing in probably a few states because of the economies of scale and because of also the inputs and the costs associated with the inputs. I think with GST, all of those elements were removed. And I think everybody in the industry benefited because of the removal of the cascading impact. And I think it allowed us to, tax was never a consideration. When GST came in, tax was never a consideration to set up a manufacturing or a manufacturing location. And generally, we have seen in the past that whenever you set up business based on tax, it is going to come and pinch you at some point in time. So I think with the introduction of GST, one of the elements that companies could focus on in terms of the supply chain was really the commercial elements of the business and not so much the taxation-driven decisions. So to that extent, I think all of us benefited with GST. I think there were certain concerns, and I think we continue to have certain concerns that we will always have. There's never a perfect world. But I think as long as we achieve 70-80% of what we want to achieve. I think we are in a good place. As we continue to progress, I think that is what we should all gun for. So I think that's where GST 2.0, I think, adds a little more leaves to the history of GST when it came in 2017. I can also tell you from my own experience, because I led the organization into the GST regime. And the amount of modeling, remodeling, the ambiguity around what the rate will be stayed on right till the last day. I think when you look at GST 2.0, I think the government has been very, very active in terms of engaging with the industry, trying to understand the concerns of the industry. The trade bodies also have been equally active to get feedback from the industry and pass it on to the government. A lot of the feedback that came from the industry was also factored by the government when they came up with GST 2.0. Even after they came up with this one press release, I think the amount of activity that happened at the trade level and at the government level, I think it's unprecedented. I have been at least part of 10 or 15 sessions in the last 1 week, either through a trade body or through the government, where we have discussed the provisions. Government has asked us what are the concerns, what can we take as actions for us. And the other heartening fact is a lot of the feedback has been acted upon, right? And you see that quickly after the press release, between the press release and today, a lot of subsequent clarifications have also come in. So I think that really shows that the government is really going out of the way to partner the industry and help the industry to transition to GST 2.0. So coming back to the original point, clearly I think cascading was anyway removed when GST came in. I think now there were certain concerns that all of us had on interpretation of what rate for products. There was a little bit of ambiguity around is that the right rate? Could it be slightly different because we had those 4 rate brackets? That obviously was leading to some litigation, but it wasn't very bad, as bad as what it was in the pre-GST era. I think I can tell you today a lot of corporates, if you ask them the litigation on indirect tax, you'll find a lot of litigation is actually the pre-GST era, right? And not so much the post-GST era. So I think all of this, I think I can say that are adding to, effectively running the regime, ensuring that the corporates, not just the large corporates, but all parts of the, business ecosystem embrace it in true spirit and not just in form. So, that's what I see as the learnings over the last 7-8 years.
Interesting.
And I think GST 2.0 is only going to further that agenda that the government has and that the industry has.
Right.
Thank you.
Thank you. I'll go back to Pramod on the same breath. There are in the same breath as cascading impact and credits, etc. There have been various sectors where we were, say, 12% because of the same inverted tax that we've spoken enough since morning, and services not being eligible for credit, etc. There is a carry forward situation that we have. Now with that 12% becoming 5, the carry forward is only going to swell. What would your advice be in such circumstances?
So this inverted duty structure or accumulation of ITC, I think had been a perennial problem for many, many years, and especially for the MSME sector. Now, as an e-commerce platform, we deal with lakhs of sellers on the platform. And the single biggest concern that we hear from our sellers is that because of inversion, like my output attracts 5% tax, and the input services, the logistic services, the platform services or technology services that I receive from you are at 18%, and I'm sitting on this 13% accumulation, and which is just growing bigger and bigger. How do I reduce it? We don't have an answer to that. Now, it's a genuine problem. If we really want to focus on fix the problem on the working capital, it hurts the MSME sector much more than the large corporates, because they have a lot of times the capital which is borrowed capital, they have to pay interest to the banks. And it's a genuine issue that it's the money of the taxpayer which is sitting with the government interest free, and not for 1 year, not for 2 years, it sometimes just goes on. So guy who is manufacturing just 5% items, he will continue to manufacture 5% items. He has no avenue. Tomorrow you can't expect him to start selling cement suddenly to absorb the overflow of the credits. Now, even if he starts selling cement, there will be input tax coming again, right? So the margin has to be so big that he is able to utilize. And now we did a study on that. A lot of items have moved from 18% to 5%, which we welcome. It's a big help on the consumer side. It's a big help for the businesses. But some of the guys who manufacture 5% items, it will take them 3 to 3.5 years to even absorb that credit, which is again the interest-free money sitting there. And second on these blocked credits, right? The 17.3, 17.5, and PBS sir in the previous session was saying this whole concept of 0% without ITC or 5% without ITC, while it's a politically nice statement, but if you look at from the tax standpoint, it's actually not that good. It blocks your input tax credits, and you have to pass on the cost in some form or the other form by raising the basic premium. Now, health insurance, life insurance, yes, everything sounds good that it has become 0%, but there is an inherent cost of 7 to 8% for the insurance industry, which probably will lead to increase in the premiums. So maybe a 1% rate for such items is far better than having a 0%. But this without ITC concept, maybe, given how the things are shaping up, will just continue to grow. But purely from a tax economics or the whole concept that we wanted GST to be always a seamless pass-through of the credits, I think some of these blocked credits, accumulation of ITCs, and this tax rates without ITC need to be reconsidered. Hopefully in the GST 3.0 or sometime in between, if they can be addressed, there will be a big help to the industry.
Interesting. Thank you. Thanks, Pramod. On the slight move from the input tax, maybe on the output tax, intermediary, I think we spoke from morning, right? It is going to go away effective 1/4/26 is what I kind of gather from the discussion in the morning. But this question is to you, Sriram. The intermediary is not something which has been new for GST. It's been there from the service tax era with some slight changes when we moved into the GST. So with that going away, how do you see it impact the already existing litigation? Because there are umpteen number of cases, Karnataka, if I may tell you, I think Mr. Shivdas left. Okay, I think there are about 30 plus writs only before Karnataka High Court today on intermediary. How do you see this settling down?
While the intermediary issue existed in service tax, right, the appreciation of the department on the intermediary issue was much better, right? What has happened with GST is 30 different jurisdictions are trying to interpret a provision on intermediary, which was earlier interpreted by one department. And that led to the increase in number of cases in GST, even as compared to service tax. Your classical example of Karnataka having so many cases, right? This matter is not new, but the number of cases that have come up in last 8 years is amazing, right? Now, one prospectively, yes, it will get settled. Now, hopefully with the change, and to Pramod's point on intermediary is one thing that we as an industry, every time we met, the government was picking it up because this is really hurting the industry more. And more critical with the amount of GCCs trying to set up in India. That was a big worry in every GCC coming into India. The question is, will I be treated as an intermediary and then will a GST add to my cost? So that's at least prospectively is gone away. The fact that the law has been prospectively corrected gives a lot of room in pushing the cases through on even retrospective as well. That's the way I would look at it. And there are enough and more judicial precedences. Yes, these cases will take time. I think the fact that the government is willing to listen, government is willing to amend the law is a very big positive is the way I would look at it. And retrospective, we're already in the courts. So hopefully it will take its own sweet time to get them disposed of.
In the same aspect, Shriyam, I would look at it like this. While the challenge was that, if I'm a service provider and my place of supply is my location, as in where I'm providing from, which is what the entire dispute on intermediary was. Now, because that will go away into the residuary character once this gets omitted, it means the place of supply will be where my client is located. No problem. It will become export. But the reverse is going to hit us now. As in, if I am an importer of marketing services from outside India, that will become taxable. Which was hitherto, we were arguing saying it is not the place of supply is outside India, so not taxable. How would you see this? Is it going to impact a totally different sector in your mind, or is it the same sector?
So it could impact across sectors, right? Obviously, there will be some impact to the sector that I represent, but it could impact multiple sectors. But again, the only point I would say, Badri, is that you still are able to take the input credit for it. It's not the cost to the business, right? It could probably add to the working capital, but it is not adding to the cost, which is what kind of the intermediary was creating. I think between the two, this is a better problem to handle.
Absolutely. That's definitely a takeaway from you, Sriram, to say that, on the supply side, while it was a cost of doing my business, on the input side, what is becoming taxable is eligible for credit. So that's really not a cost. Thank you. Thanks so much. Shiv, one question for you. It is what we've spoken from morning, and I'm sure we've been speaking about it from the 56th Council meeting date. Is, while the reduction in rates of tax is a welcome step, and I see all the corporates actually taking action, already having taken action to kind of ensure the credit is passed on to the consumer. Like I was mentioning in the morning, there was an ad which I recently saw in one of the papers which said, why wait till 22nd? Book the vehicle today, you'll get the discount, you'll get all the rate reduction equivalent discounts today. So people have already started passing it on. But in your industry in specific, which is not as big as a vehicle or, things like that, how do you see the logistics in this, sir? If I may, if I have to say that, 21st I'm selling a product at 100, 22nd morning I have to sell it at 95 or whatever the reduced rate is. How do you see, how best, what are your notes in terms of how we should deal with it?
Yeah, first of all, I'll tell you that we didn't start discussing this on the day of the 56th Council meeting. I think we knew what was in the annual. And I think with all the news out there, we knew that as far as the food and beverage, which I represent, is concerned, we do see most of them going down to the 5%. Right? So I think we were already starting to think about what we could do, and we had started already putting down the areas of impact. And in India, everything is not organized trade, right? We also have the general trade, as we call it, which is the larger share of the pie when it comes to sales and distribution. And there you're actually talking about multiple levels of, inventory and multiple stakeholders that need to be, that need to pass on the benefit. Because finally we are talking about benefit to the end consumer, who's probably 3 levels below. So clearly I think there is no doubt about the fact that the industry is committed to passing the benefit on to the consumer, right? In not just form, but in spirit. And I think spirit is what is most important here. That is a given. I think with that in intent in mind, companies have been looking at 3 levels here. So actually 3 levels of distribution, and also what is the actions at those 3 levels. Clearly, for companies that are packaging the products, there is an action to change the MRP. And all of you know that the food and the beverage segment has, and I think that's true not just for food and beverage, but for I think a lot of the consumer sector, FMCG, there is something called a price point pack, right? Which is not just the large 250, 500, and 1 kilo, but it's really the 5 rupee, 10 rupee. I think they have a very clear role to play in the portfolio. And today, if you see across categories, you will see those packs. In fact, I remember there used to be a pack as low as 50 paisa, right? When that was the lowest denomination. So as a result, we had challenges not just in terms of grammage interventions, not just in terms of MRP interventions, but also about what do we do to the price point packs, right? The 5 rupee, 10 rupee. So clearly when companies are looking at initiatives on changing for products that they pack with effect from 22nd, they are looking at 2 kinds of intervention. MRP and then grammage, MRP and grammage, because they don't want to let go of these price points which deliver a certain value to the business and to the consumer. So clearly companies are looking at both kind of initiatives. While I think there was a lot of debate around, whether grammage is considered as a pass-through. But we believe, if you really look at the spirit of benefit to the consumer, if the consumer today, 5 rupee pack is getting an X grammage or an X ml, the moment you add an X plus, that is the benefit to the consumer, right? So that's the way we have interpreted it. I think everybody in the industry is now clear that that is the way they would like to, pass on the benefit. That is really that is when we are starting to pack afresh. But then there's a larger challenge you have of inventory in the pipeline, which is at all these three levels. I think companies here also, there was a debate whether, the MRPs, the packs that have been packed and they are in the supply chain, should they be stickered? Clearly that's an operational nightmare. And I think the industry across sectors has, represented that that's something that is operationally not feasible to do. And here we are hoping to hear something positive. While we are told that this has been taken quite positively by the government, we are waiting to hear some notifications to that effect. But again, if you look at the substance over form, that is delivered, we can deliver that. How do we deliver that? So basically what we are saying is, day one, on stocks that have been pre-packed, we will do a discount. We will run a special discount to reflect the drop in the output rates. Okay. Whether it is at our billing to the distributors, whether the distributors billing to the retail, or the retail passing to the consumer. I think the challenge will be at the last level, which is at the retail, because most of the retail, the smaller retailers are in composition tax. So, really is it a benefit for them? It's probably a cost for them. The GST is today a cost for them. So how do they pass on? Clearly, I think companies are committing to say that if the retailers do pass on the benefits and if they have to pull back, if it's a cost for them, companies will support. Because that we are talking about 7 to 10 days of inventory. Ultimately, in all of this, the action for us is to really deliver the benefits to the consumer ASAP from day one, right? Even though not by way of an MRP or a grammage change, but at least in terms of the final price that the consumer is paying by way of a discount. So these are the initiatives I think that everybody is looking forward to. I think companies have also started publishing the revised rates, and you can see a lot of companies going, out of the way to come with information, and they're not waiting till 22nd. While the decisions are made, and because you also know that for the products to reach the shelf on 22nd, there are these two levels that you have to cross, right? You have to send it to your distributor. Yes, it's possible for the organized trade to do it faster, but for the, the general trade, as we call it, they need to go through these two levels. So as a result, companies are proactively starting to pack revised MRPs, and they will bill it, maybe while they'll start billing, but some of them are proactively billing ahead of 22nd. Like you saw the Auto announced that they will pass on rates despite the rates changing only from 22nd, well before 22nd. So I think in all in spirit, I think everybody is, supporting the intent of the government to ensure that we pass on the benefit to the consumer as early as possible.
Shiv, on the same aspect, changing the MRP in intent, in substance, not just the form, passing on the benefit, every corporate is looking at it. Yes, absolutely. There's no doubt in that. But infrastructure challenges, how do you think, how can we even think of replacing the MRP labels which are lying at the retail stores? Because in this context, not sure if anybody has seen it, but 2 days back, this case, TTK Prestige was listed before the Karnataka High Court, where they wanted a stay on having to affix the labels for whatever reasons. Court said, I can't give you a stay ex parte, so it is listed for hearing tomorrow. And I think Mr. Shivdas is only fighting that case. So it would have been good if he was here. But nonetheless, how are you overcoming this, sir?
No, as I said, I think we continue to believe that the industry will be heard by the government, because I think it is going to be quite difficult, possibly impossible, to get the stickering done in the outlet. In fact, some of the products, if you try and sticker, it will damage the product inside.
True.
So instead of delivering value, you will actually destroy value for the consumer.
True.
So it's not just about the price, it's also about what you're giving to the consumer finally for what he's paying.
True. You mentioned one more thing, which is about additional grammage. While courts have, in umpteen number of cases, while Section 171 was alive, they have said additional grammage is not sufficient compliance with Section 171. But now that in form the section having gone, but in spirit is what we have to in substance is what we have to follow. Maybe in addition to grammage, with your permission, I'll just add this. Maybe one option that industry could possibly look at is adding another product to it, which is making it a composite supply or a mixed supply, either way, bundling it, could be another option to kind of say that the benefits have really been passed on in substance to the consumers.
You know, we've talked about it in the past. It is construed, you know, when you give additional product, it may be construed as a consumer promotion and not a discount, right? So you are actually forcibly giving some product to the consumer. The consumer may not like it. When he's going to buy a packet of tea, he may or may not want to buy a pack of shampoo. I'm just giving an example. It could be something else that you are trying to package along with it and provide that as a possible additional value to the consumer. There was a view that this is not really passing discount for the product that he's buying, but you're forcing the consumer with some other product the consumer may or may not want. So it is really delivering value to the consumer because you're giving an additional product to him. That is the question, right? So I think we believe I think the industry believes that between giving some other product, giving the same product, because that is what the consumer is finally paying for. If you're giving additional product, then probably it is closer to delivering a discount to the consumer.
All right. Interesting analogy. I'll come to Sriram now. When, you know, your industry largely is where the rates of tax have not got impacted directly. The change in the rates of tax has not impacted the revenue piece, but on the cost piece, it is definitely kind of impacted. You know, but with the insurance becoming zero, or you know, the various other products which have become zero, or how do you really see that this should be dealt with? In the sense, I think we spoke about it, but let me hear it from you as well. How do you see exemptions in a GST framework at all, in addition to what we kind of spoke in the previous session?
I think going back to what we discussed in the previous session as well, right? You know, exemption as a concept, does it really, while it's good from an optics perspective, does it really bring the cost down? Because exemption with input becoming a cost, right? Essentially, the end consumer doesn't get the benefit out of it. It's maybe a right thing to do from a political perspective, from an optics for catching the headline in a newspaper, or from a breaking news, if one way to look at it. But realistically, from an exemption perspective, the input becomes a cost. Effectively, the consumer gets to pay the same price, right? Now, since you mentioned insurance, I mean, one of the points why insurance was in 17.5 was because that's where the consumption ended, right? If the basic consumption of insurance is exempted or zero rated, then not sure why it's been done only for individuals and why it's not for group insurance. So technically, on the insurance point, when we are discussing with the ministry in the past as to why insurance has to be in 17.5, that the logic, which sounded pretty logical, was that the consumption ended there, and wherever there is a consumption, there has to be tax. If the same analogy has to be extended, I don't see a difference between individual insurance versus group insurance offered by corporate. So hopefully, much before GST 3.0, we are able to get that across.
Sure. I'll just maybe put it this way. I think Venki and I were talking about this a few days back. Whether it is an individual who's taking an insurance, health or life, or whether it is the corporate which is taking for him as a group insurance, doesn't matter. Finally, the insured is an individual only. The individual doesn't change. So why that change at all was something we were talking about.
I think I'll take a step before. GST is a tax on consumption. If consumption of a service is exempt, whether I consume it directly or through my corporate, if the consumption is exempted, how does it matter how I consume it?
Fair point. Sir, in the same breath, I'll again continue with you only, Sriram, on this. We spoke about inverted tax. We spoke about this additional cost. One of something which is standing out when we talk about this additional credits getting accumulated, inverted tax, etc., is refund. No doubt, it's been a good experience as far as the export refunds are concerned, not the IDS, because we have to still see how it's going to kind of span out. But you have seen refunds not just under GST, but under other laws also, which is, say, income tax. Do you believe there is anything that we should copy from the income tax, the procedures, the way the law has kind of fallen in place there to GST, or maybe vice versa?
No, I would just want to make a point even on refund for export, right? The big difference between income tax and GST is let's say we are an organization which have 65 registrations operating across the country. So I have 65 jurisdictional officers trying to interpret that refund. The biggest challenge in GST today is, I put a refund in one jurisdiction within the same state, one authority will approve, the other authority on the same patent will take a completely different view. And then you're talking about different states. So even within export, I think with income tax, whether it's right or wrong, there is one jurisdiction who determines it across the country, then you have a mechanism to go for it. The challenge on refunds has been beyond everything is interpretation by different states on the same document, right? That's something that's not even settled in export itself. Now I'm only worried that if this now, see, it's about export, refund is a very, very small section of the economy, right? Now if you're talking about inverted duty structure with GST 2.0, the volume is going to be significantly more, right? While the press release talks about 90% refund, it also talks about based on risk assessment.
Risk parameters.
Now the risk parameters is something that we've always heard on income tax, but we don't know what those risk parameters are. It's not something that the taxpayer knows, right? So if the risk parameters are disclosed to the taxpayer, if it's a joint activity, if there is a transparency on what it is, possibly, it'll be good. You'll be, amazed to know this, Badri, even on export, right? While we say export as immediate refund, the way the law works, the earliest, the most efficient company can get the refund is 6 months in the law today. Because you do an export, you file your soft tax, you need to get it approved, there is an RBI involvement, there is a EBRC, eventually everything you conclude, then you go to the officer and then he has time to do it. The most efficient company today, there is a 6 months working capital blockage, if everything goes right, assuming the customer pays on time.
Understood.
Right? Now, if that needs to come to a larger organization, and my real worry is also that this is going to impact MSMEs as well. The ideas is across the spectrum. Now, only one of the best practice that I've seen elsewhere is, there are countries which do risk assessments, at least for large taxpayers, where it's an interactive process. It's almost like an assessment process, right? You have been asked questions, you respond to it. Then there's a discussion on what they perceive your risk to be. You can make additional submissions. Then they finally tell you a risk factor, and that continues for next 3 years unless something goes on. It's a very, very transparent process. You know what your risk rating is. The officer knows what the risk rating is, and that's very transparent. You can challenge, you can engage with them. Going with the experience of income tax on the risk parameters, there is a black box for the taxpayer at least, right? We know there is something that exists, but we don't know how it's computed, what are the perceptions that's going there. And the second question again is for someone who's operating across the state, is it going to be a PAN level, or is it going to be at a GSTN level? Will you assess, will I have 65 risk scores or will I have 1 risk score, right? That's something I'm very wary about. I hope, the spirit of GST 2.0 is towards making it easy for business to operate. I hope the same spirit gets carried forward to the way things get operationalized on the ground.
All right. Pramod, he mentioned about, the 65 different jurisdictions he has to deal with for refunds, etc. Refund is something which we've been dealing with from day one. As soon as my export is done, all my documentation, as he said, is ready. I applied for a refund, so I've been looking at the tax office administrative piece from that day. But the rest of the proceedings, the administration piece, whether we call it assessment or inspection or by whatever name, under whichever provision, largely we have seen it really happen only in the last 2 or 3 years, right? While it is for 17-18, we actually see assessments of 17-18 also happening only in the last 2 or maybe 3 years, not more than that. So what is your notes on this, sir? How do you see that this has evolved, and where do you see GST 2.0 kind of moving?
Okay, so on the GST audits, again, multiple jurisdiction is a big issue, and if you have to deal with multiple legal entities also, then the number of jurisdictions that you deal with, just multiplies accordingly. Now, we have a mixed set of experience. So whichever entities are being assessed by the central authorities, I can say that we have a relatively far better experience compared to wherever the state authorities are involved, and that's a service entity. And I would say that, maybe state GST auditors still have a very steep learning curve to understand the service industry. And a lot of times they don't understand the nuances of service industry, a lot of business terminology, the concepts. Now, in service industry, you do not see the movement of goods from one state to another. The questions of, why all your employees are sitting in head office in Bangalore, why you are not cross-charging, why you are receiving the cross-charge. So all those sort of issues, largely come from the state authorities. While central authority, given their long experience in the service tax, I think they have a far better understanding of the service industry. Now, audit experience, I would say, again, the kind of audit findings had been a mixed bag. Last 1 year, I would say the GST auditors were also under tremendous pressure, that within 2024 fiscal year, they had to finish 4 financial years, starting from 17-18 to 2021. So a lot of issues were more like copy-paste, same issue what you picked up in 17-18. They just continue to paste in 2021 also. So I would still say that the audit experience is still better than, probably what we had in VAT and service tax experience. Although as a tax person, you can never be happy. There is always some issues. And the icing on the cake was, even if there is an issue, and there were a lot of frivolous issues which are more like laughable, where they try to impose a GST on ESOP cross-charge from your parent company overseas, equity infusion by your parent company outside India into India. While those issues might be laughable, but we said it's good that the auditor is just confined to these issues, right? They see a big number coming out and they don't focus on anything else. And you always knew that this will just take one hearing before the tribunal or before the commissioner for that issue to go away. Now, to our pleasant surprise, when as part of policy advocacy, we started representing those issues with the finance ministry, they understood very fast that what was happening on the ground. And pleasantly, those issues were understood well, they were addressed well, and they came out with nice circulars. Now, most of these issues on ESOPs and all are things of the past, and the demands have just disappeared. Now, another big controversy was happening around the electronic gift vouchers. Now, I'm not sure how many of you are familiar. Now, issuance of electronic gift voucher, suddenly the state authority started seeing this as a taxable activity. That voucher itself should be taxed. Now, as a tax litigator, you can be happy with that. This litigation is increasing, so the job of the lawyers and the tax practitioners stay alive. But when you look at the merits of the issue, how can an electronic gift voucher ever be a taxable commodity? Now, you do not know whether the customer will finally redeem it for a 5% item or a 12% or an 18%, right? But again, the happy thing was that once we took it to the finance ministry with the other players who were in the business of electronic gift vouchers, they immediately formed a study group, they called all the companies, they understood all the issues, and the clarification probably was more than what the industry was expecting or asking for. That's the level of maturity, the seniority, and when you are dealing on the policy advocacy, please appreciate that you are dealing with the finest brains in the country. They passed probably the toughest exam in the country to make it there. And as Badri was saying in the morning session, that you just have to start talking about an issue, you speak 25% and they pick up remaining 75%. And if there is an intent to address it, those get addressed. So in last 2 years, the number of clarifications which have come out, starting with how the DGGI should be doing the investigations, the SOPs around that, you can't ask for more, right? So, and that gives you the confidence and courage also that keep on meeting them, keep on telling them there is a real intention to solve the problems rather than creating the problems. But yes, while solving the problem, something will happen. While reducing the rates, yes, IDS has become complicated. We can keep on worrying about that. But if you continue to be an eternal optimist, there will be a solution maybe later or sooner. It's just a matter of time.
Fully agree with you, sir. But on the minds that you said are which is sitting on the policy making side, fully agree with you. But when it comes to implementation, there is a very big gap. I'll tell you, just to add to what you were telling, you were also mentioning on terms of the issues that are there in different jurisdictions. Sir, about a year and a half back, before our circular 210, 213 and all came, the issue that was staring at me was, let's say, Flipkart. Okay, it's a registered brand name. It's a trademark. I had a notice, I had a proceedings which was in front of me which said, look, that is owned by Karnataka. So you have given a right to use to other states. I mean, there is no stretch, there is no limit for imagination when you are decided saying you have to tax a transaction. I mean, that's the kind of extent that administration has gone to.
On a lighter note, Badri, I would say we should appreciate the creativity and imagination on the other side.
No doubt, sir. No doubt in that. No doubt.
They can think what we cannot think, and those are the problems which are easier to fix. But again, if you look at the entire GST journey, GST as a journey, is it not better than what we used to face in VAT, excise and service tax? If it is better, then we will reach a happy destination maybe before we all hang our boots.
on the creativity aspect that you mentioned, 10 out of 10. But my only point there was the direction is wrong. The direction in which the creativity is being applied may need a relook. That's all. So now slightly I'll take a small deviation in terms of how we've been discussing. I'll take it with Shiv first. Shiv, you have some rapid fire questions. All right, ready?
So that's what, a one-liner?
Yeah, one-liners. Possibly one words. One word. Okay. So what has been the single largest benefit of GST for your industry in the last 8 years?
Higher demand.
Higher demands?
Past you're saying?
No, in the last 8 years.
In the last 8 years, of course, the removal of cascading impact of taxes.
Fantastic. Which sector in your view has gained the most in GST? Need not be yours.
I can't say that for any industry, but I can tell you FMCG definitely has gained.
FMCG. Fantastic.
I think probably one of the highest.
I would kind of
its
concur
gain.
with you. The manufacturing sector is the one which has gained the most because the excise element was hidden for a very long time. Then I think I have the answer for the next one. Would a simpler rate structure help more than the current one? While we say one rate is gone, do you want it even more simpler? You think a two-rate structure in India is ever possible?
See, for us, again, it's a function of where you are, what's your product mix. Food and beverage, if I have to call out food and beverage, I think it's now gone to one rate for most of our products. That's not a good position to be in, primarily because of inverted duty. So we would possibly have liked a two-rate structure. In fact, a lot of initiatives that we were driving last year were based on the two-rate, more or less the two-rate structure that we had. But now it's one rate, so we have to go back to the drawing board.
Interesting. Next is, do you agree that e-invoicing and e-way bills have actually reduced tax evasion?
Absolutely, that's important. It's reflected in the numbers.
Okay. Most complex aspect of GST compliance today for the industry that you are in: ITC reconciliation, rate classification, litigation, annual returns.
I'd probably transition is the largest issue for us today. I think after that, I think we are pretty much done.
Okay, nice. What percentage of compliance in your company is tech enabled? 0 to 25, 25 to 50, 50 to 75, 75 plus.
75 to 100.
Fantastic. Fantastic. Should AI-driven risk-based scrutiny replace physical audits in the next phase? That was one of the topics that we spoke in the morning.
Yeah, absolutely.
You believe so?
We would support that.
All right. Okay. Is GST really helping increasing formalization, as in reducing the parallel economy?
Yeah, absolutely. Agree.
Okay. The last one. Which word best describes GST in your view? Transformative, challenging, incomplete, overhyped?
Transformative.
Fantastic. All right. Thank you. Thanks so much. So I'll go back to one more question. On the same technology piece, I think we closed that rapid fire with Shiv on the technology piece. This is to Sriram. Of course, GST is a tech-enabled law. There is no doubt in that. I mean, without technology, there is nothing that can be done in GST sheerly because of the volume, right? So, how do you see AI or getting used in this, in the reconciliations, or today we've seen orders also consider the AI-generated information.
See, if you by and large look at GST, right, keep the rate classification out, most of the issues are about reconciliations, and AI and technology is easily deployable where the data is structured. I mean, you don't even need to go to AI, even bots could do it, right? So the kind of, if I look at finance function and if I look at multiple processes out there, there are 2-3 functions which are conducive for AI, and I think GST is right up there.
Okay. All three gentlemen sitting with us here are people who are leaders in tax advocacy. I started my discussion with that. So today, in your experience, in your interaction with the government, where do you think, this is for all of you, where do you think the government is really using this analytics and various other, the big data or whatever other format of analytics is? Sir, with you first.
Catching fraudsters much faster.
Sorry?
Catching the fraudsters much faster, people who are using fake invoicing to pass fake credits.
All right.
And the fake registrations.
All right. You, Shiv?
I would agree, because at least, every maybe a week or 10 days, you will find headlines about, fake invoicing, busted, racket busted. I agree with him.
Sure. Sure.
Yeah, I would say across the tax administration, even the way the refunds are processed, if I go to the direct tax side, the number of 143 ones you get on non-complex small taxpayers, I think across tax administration it's been, in fact, oftentimes I say more than as the government is automated, right? We are probably catching up with the government when it comes to systems and automation.
I echo that. I think government is far ahead in terms of the deployment of analytics.
In fact, I'm told that the refunds for the last financial year have already started flowing.
Refunds?
To individuals. Refunds for direct tax have already started flowing.
Yeah. It's I think about 36 to 48 hours you get refunds now. Yeah. Pramod, now you rapid fire. Start. All right. Has GST simplified compliance or just shifted complexity elsewhere?
Certainly simplified compliances.
Simplified? Okay.
Hugely.
So I should not take the first word that you said, shifted. All right. Which digitization reform has helped the most? E-way bill, e-invoicing, online ITC registers, automated returns.
E-invoicing.
Lovely. If you have to recommend one major change to GST 2.0, what would that be?
Remove 17.3 and 17.5.
Remove?
17.3 and 17.5.
Okay. All right. Fantastic. No doubt in that. If GST were a movie, I don't think I'll get this pronunciation right. My daughter keeps correcting me every time. Genre. If GST were to be a type of a movie, what would you call it? Thriller, comedy, drama, action, tragedy.
Thriller. It's a thriller.
Huh?
Thriller.
Thriller.
Coming from where we were and where we are.
Horror. Anyway, he chose another one. Okay, give me one word for 56th Council recommendations.
Very bold.
Very bold. Super. If GST were a student of 8 years, how would you grade it? A plus, B, C, D?
A plus.
Lovely. Most common reason for GST notices in your industry? ITC, e-way bill, rate, procedural, interpretation.
Interpretation.
Okay. Which sector must enter GST next? Petroleum, electricity, real estate, alcohol.
Real estate.
Real estate. All right.
You have to remove 17.5.
Oh, so you consider real estate out because there is 17.5. Wow. That's a new way of looking at it. Very nice. What remains the most painful compliance requirement under GST for you?
Sorry.
What remains the most painful compliance requirement?
If I have to think so much about the pain is not there. So, I would say the audit.
You'll be?
The audits.
Audits. All right. One most overused phrase in GST discussions. One nation, one tax, ease of doing business, seamless credits, revenue neutrality.
Seamless credits.
Seamless. Overused. Okay. All right. Okay. Lovely.
Thank you.
Lovely. Thanks, Pramod. Maybe, how much of time do we have? We have another 10 minutes now. Okay. I'll just take one more question. From Shiv, this is for you. How do you see from a board or an investor perspective the risk parameters or whatever else changing, either for the good or for the bad, either way, because of 2.0?
I don't think risk has gone up or gone down. I think the only element that is a challenge is, and that if I put myself in the shoes of the board or audit committee or whoever, I think how do we ensure compliance to 2.2, especially when it comes to pass-through of benefits. Otherwise, I think everything about this is positive. So it's really about managing the transition and delivering to the expectations that please pass through the benefits as early as possible. Otherwise, I don't see anything which is negative out of GST 2.0.
Right.
And I think there's a lot of positives because while I know there's a lot of initiatives that have happened this year which provides additional money to the consumer, whether it is tax, rate changes, whether it is interest rates going down, but probably this one is the largest, which provides more money in hand for the consumer, and that means that the industry can look at higher demand. It could be different for different industries, but I think overall, if I look at it, it's really going to spur demand, and I think that's something that is always welcome from an industry perspective.
All All right. In the same breath, on the integration, on the coming together piece, maybe if I may take that from what Shiv said, Sriram, for you, how do you see finance function really having to engage or connect itself with various other stakeholders within the organization? Do you see that changing because of GST 2.0, or how do you really see it?
No, I see it would have to change because the systems have to undergo a change. So you need to get the larger organization, and definitely the supply chain has to be relooked at depending on the kind of procurement one does, but it's not very material, right? Because technically, I mean, if you look at 2.0, what's really changed is the rates. So it's not something that's a dramatic shift from that perspective, but educating the people on the ground, that's going to be more. It's not that big an effort the way I see it.
Okay, all right. Now I'll stay with you. Rapid fire for you now. I have a few questions. Start? All right. What is the most common area of interpretation challenging your sector?
HOBO.
Oh, all right. Okay.
I think we simply have forgotten that in the euphoria of 2.0.
Correct. That is because we have a circular and we have proviso to 28.
Circulars existed.
Yeah. Without circular, I agree with you. Next, do you think the promise of one nation, one tax has been achieved?
Promise of one nation, one tax is achieved, but promise of one nation, one tax with one interpretation is yet to be achieved.
All right. Nice. If you had to rate GST's success on a scale of 1 to 10, 1 being the worst, 10 being the best.
Somewhere between 8 to 9.
8 to 9, fantastic. Has GST reduced litigation or created a new set of disputes for you?
So I would want to believe that what we are going through is a transition phase, as I think, if you asked me this questions 2 years back, I would have probably said increased litigation, but I think it's reached the tipping point. I think this is much more stable than the earlier laws.
All right. What do you think the GST tax administration, the field, needs the most? Better training, more empathy, stronger technology, lesser paperwork?
Better training.
Better training. Okay. Should GST Council meetings involve industry representatives also?
No, there's already enough consensus they're trying to build with so many political views out there. Getting industry there will only make it, will make it slower.
All right, that's a nice answer. What do you think could be the biggest risk because of GST 2.0? GST 2.0, biggest risk that you foresee?
Refunds on especially IDS, that's the biggest risk. Especially I'm worried because of the people in the MSME, if their credits start getting blocked. I think that's something. But what good part is that's something that's been recognized. I hope we deliver it well so that the larger section of the industry doesn't get impacted.
All right. Next big shift for GST compliance: AI-driven recos, blockchain-enabled invoicing, advanced analytics, ERP-linked native GST compliances.
I would probably go beyond this.
Okay.
PAN-based assessments. With one administration.
Fantastic. Lovely. Which global GST or a VAT model should India benchmark itself against? EU, Singapore, Australia, UAE, Canada?
If you ask me, most of these jurisdictions are benchmarking on what we are doing. We are doing pretty well. I mean, especially if you look at anywhere in the Middle East, it's probably replicating what we've been doing. I think we are pretty good on that aspect. Just that some of the teething issues, if they can be ironed out, we are pretty much okay.
Sure. Super. If you have to rename GST, how would you call it? Great simplified tax, general stress tax, growth supported tax, or the one which is in the social media, Gabbar Singh tax?
General simplified tax.
General simplified tax. Super. So one last question to all three of you. In one line, your vision for 2030.
GST 3.0, is it?
Whether it is 3 or 4, it doesn't matter. Your vision from a GST 2030 point of view.
Yeah, I'd probably say remove that last level of cascading impact. I'll not say cascading, but ensure that services are treated the same way as goods.
Okay. Done. You say through.
Tax all goods and services, even if at a lower rate, remove all ITC restrictions.
Fantastic.
Yeah, remove all ITC, ensure refunds come faster.
All right. I think it's a wonderful discussion. A very big round of applause to all three of them. It was lovely. It was excellent to hear it from all of you. Like I said, the lot of advocacy happens from the three of you across India, right? And you are people who have seen the implementation piece across India, not just about the policy advocacy, but implementation across India. So fantastic. It was lovely interacting with all of you. Any questions? I mean, maybe 2 questions before we kind of close this session. Sir.
So, for a person who doesn't need shampoo, what is the use of giving additional shampoo?
As I said, we have to look at the larger purpose.
But actually, interestingly, Shiv, PVS and I were talking a couple of days back on this, bundling another product with that. While you said, I may have to sell a product which is not required by the other person, look at it this way. The analogy which we were discussing was, I am a manufacturer of both the products. So I am promoting one along with the other. Bundling is never from the viewpoint of a consumer. It could be from the viewpoint of a seller as well. The bundling, how we should look at is not there in law. So, I mean, we can look at it both ways.
Absolutely. That was the debate, saying that it is not required for the consumer. You are promoting your own product.
Right.
So that cannot be construed as
That was the debate with PVS a couple of days back.
Yeah. So you are promoting your own product, so you cannot use that to say that you passed on benefit.
Fair point. But I'm giving it at a reduced price. Or maybe
So
the
what?
price
I don't
of
need
the
it.
price of one product I'm giving 2.
I'm looking for a pack of tea or a pack of biscuits. So give me that.
All right.
I'm happy to take additional grammage. Charge less or give me additional grammage. I'm happy to do that. As a consumer, if I put myself in the shoes, I'll be happy with that outcome.
All right.
But if you give me something else which I don't want,
All right.
I will not prefer that.
All right. Okay. More? Anybody else? Okay. Madhur, you have something? No? Okay. All right. Thanks, gentlemen. Thank you so much for this wonderful discussion. It was fantastic. I mean, no words to kind of describe that, but thank you so much.
Yeah. Hi, everyone. In fact, fantastic session. Ensured that we are all, after a amazing food, that we are very, very active. Very well done session, and thanks to all the panel members and Badri. I think now we are getting into one more important session for the day, which is AI on tax. Right. In fact, all the panel members covered in terms of how important the technology is, especially in GST with multiple registrations and online filing. And then we have one of the expert with us who will speak about it, Vishnu. Vishnu is a partner with Singvi Dev and Uni with more than 23 years of experience and seen clients day in, day out, has a lot of credentials with him, who has extensively worked with various corporates, and I know he can bring in a lot of experience which he has now converted into how to solve those experience. I think that's what we will hear from him. Please, Vishnu, welcome.
Good afternoon, everyone. Thank you, BCIC, for this opportunity. So I'm not going to speak about how to use software for sure. And I think we've been privileged to hear some great minds through the morning and just the previous session, who have not only seen the first principles of tax laws, but have been instrumental in scaling its application and use of technology in that scaling. The theme I'm choosing to address this whole story about artificial intelligence and tax is to look at it from how we move from compliance to counseling to control. I think personally, and these are all my personal views, I think none of us can predict exactly where AI is going to take us 5 years later, but most of my views should hold good for the next 3 to 5 years is what I would anticipate. The role of a tax professional is going to move from compliance to counseling, in my view, to tax control. Just to sort of share a perspective on this, let's look at how any of the technology shifts impacted us. There used to be typewriters. Typists were the most prominent professionals at some point in time in the generations. Most of us may have not even heard of them. But that got disrupted when word processors came in. And why it became easy? Because everyone could type. Then we had the digital cameras and the film rolls went out. And then what happened? Photo sharing started. Then we had mobile phones which developed smartphone features, and suddenly we had a new economy working digitally. We had apps, we had systems being driven through the mobile. Then we had the ERPs come in, we had a lot of automations, tax functions became easier to handle in terms of digitized records and workflows, and reconciliations, and we've heard enough of that how technology is being used for reconciliations. And with ChatGPT, a lot of drafting of template submissions have started. So what's going to be the disruption next? So I think from a human professional's point of view, what will disappear are the functions on the left, and what will come through is on the right side, where our roles will move towards how we are analyzing data, simulating using technology, what predictive analytics are we taking in our decisions, and most importantly, what governance models will we bring in our lives. I think humans are going to stay, because I can't imagine a world where we'll be fine with what robots are consuming in terms of data, what they are sharing with tax officers. I'm not even sure if we'll be comfortable not meeting the tax officer. I know as an income tax practitioner in faceless assessments, very happy 80% of the time, but 20% of those issues makes me think, I just wish I'm able to meet the officer and explain. So I think the world is not going to change so fast on the governance side or on the tax administration side. And just the way to look at, as tax professionals, what AI is going to do in our careers, it's more like, getting rid of the muscle memories we have developed. We've been just used to doing a lot of things. Every technology shift triggers that, and I think that's what AI is going to do. AI is bringing a lot of disruptions. All of us have heard enough of those disruptions. We are anticipating a lot of things happening, but from a pure tax function standpoint, I think it's yet going to be in the human's control. So with this fast-paced change, right, I think again as a tax function, we should go back to 3 basic values which will be required to manage this: trust, speed, and foresight. But how these functions are happening is changing. When it comes to trust, data integrity, or audit, the blockchain technologies, explainable AI, are all systems which are helping us evidence the activities. Speed, obviously with technology, everything becomes super fast. And I think this, GST, the refunds and income tax are all examples of what technology can do from a speed standpoint. Foresight, predictive capabilities, how many simulations can you run on data, how quickly can you change price, GST 2.0's implications on pricing models. I'm quite sure people who are tech-savvy organizations who have introduced technology have been very quick in anticipating what the price pressures need to be amended for. So as tax professionals, whether as practitioners or in the industry, we have been looking at anticipating tax policy changes. We've been, while very active in the audit side with our administrators, asking questions and looking into it, and we trying to find evidences to explain to them, trying to simplify our business models to explain to them. All of this has been happening. So what's going to be different in the world of AI? I think in the world of AI, what's going to happen is all of these activities are going to be almost real time. I think questions from tax authorities, the pace at which they may follow up on reconciliation issues, misalignment and representations in different laws, all of these issues are going to just become faster. So in terms of the thinking we need to do as AI gets more and more engraved into our lives and our organizations is how are we resetting the systems, and we need to develop a system thinking to this. Just at a very, very fundamental level, income tax taxes human beings on sources of income and formats of human beings, corporates which are owned by human beings. So finally, the UBOs are human beings. Indirect taxes, in India, the GST became consumption-based destination tax. But they looked at supplies within organizations. Now with AI coming in, a lot of transactions could happen between machines. And the business model changes would mean that there's a huge amount of capital which will be invested in creating those machines. So are the fundamental economic parameters itself shifting? Will a destination consumption tax be the way for a country to look at collecting its revenue? More importantly, the distinction between income tax and GST, just at a policy level, is getting blurred. A lot of us who would have heard of equalization levy, which was introduced under the Income Tax Act, it was almost like a service tax, right? The way it was levied, the way it was collected, the way it was understood also. At times, the income component of that transaction was forgotten. So these blurring in tax laws is going to just increase. And maybe this is where India as a nation and tax administrators in India should be proactive, because as we all agree that tax administrators have adopted technology at a fantastic pace, their understanding of these fields are far ahead and their ability to invest in these are high. This is needless to say from morning, and all of you are GST experts. A wonderful, just to sort of observe what our nation has achieved. 100 issues on tax laws, whether it's income tax, GST, any law. But just look at how from 2017 till now, within 8 years, we have moved in terms of tax technology, right? The foundation was led by GSTN. Then we had the e-way bill for movement tracking. A lot of startup business models, truck tracking, etc., GPS connectivity connected to e-way bills. And then you have e-invoicing, right? With all of these technology, the administrators have access to almost real-time data. And the next will be the predictions, which will happen. And that's what we are seeing in terms of trends on what administrators are doing. Fundamentally, again, to understand why this shift is happening, what will technology do to tax transactions, interpretations, etc., is that GST has progressively taken itself almost close to being able to track a transaction on a real-time basis. So with all of this, we heard that where AI is being used in the previous panel, these are those clippings which people were referring to. Pramod was spot on in saying that the area where AI has been used by tax administrators is the detection of tax evasion and fraud. And there's a 2024 OECD report which sort of validates that. It's very interesting to observe that almost 79% of technology which is being used by the administrators are for detecting tax frauds. Virtual assistants, which are so-called meant to help the taxpayers, is the next use case. What is not so encouraging for us as taxpayers is not using technology to ensure the integrity of tax administration systems. Now, this is an area which hopefully administrators will look into as to how AI can be used in order to strengthen controls within the organization, within the tax administration, and how they could be held more accountable. Just like industry is investing in technologies to identify red flags and correct them prior to assessments and audits, I'm sure the administrators can use a similar line of thought to improve the integrity of officers and the compliance with law. How I look at the playbook of the regulators, and this is probably a little futuristic, I would say, but I won't be surprised if in a couple of years we'll be discussing this in a lot more precise examples which we are all facing. The regulators' playbook seems to be risk scoring, which they are using all the data they have in order to classify taxpayers and risky transactions. Automatic notices are being issued, which again, a lot of us are seeing what is happening in terms of notices being issued, and also some of the processing of orders, like the 143(1) in income tax. And the cross-agency integration, data sharing between GST, income tax, customs, and at times FEMA. Now, regulators are ahead, yes. Corporates are catching up. They are invested significantly in technology. AI is accessible to both. How are we going to use that? And is it going to really be an assessment where two machines are representing, one from the regulator and one from the corporate? And is that a possible future? In my view, yes, because with the quantum of data and the speed expectation which businesses will now start getting used to, it will be humanly impossible to answer the tax administrators on that volume of data. And I think as taxpayers, it will be impossible for us to manage that quantum of data to clarify queries. But all this sounds fine, but there are serious challenges from a legal standpoint. First comes the laws for AI, right? None of the countries in particular, I mean, in India for sure, and even in the world, have come up with a definitive legislative framework as to how they are going to govern AI. The issues of privacy, the issues of data identity, the issues of security protocol, there is nothing which is governing these systems. Now, this is going to result in some kind of negatives in the world, in the society, and therefore new laws will come in. Now, if every country is going to draft its own law on AI, then are we going to move towards localization of data, which means every country will say, we will have our platforms, we'll have our language models, we'll have our data, and this is how those AI models will run? Or will there be a concept of standardization of AI? Now, standardization of AI, in my personal view, takes us one step back, because you can't standardize intelligence, right? And therefore, what are they going to really standardize? So they're going to probably lay down some protocols. That system should have these kind of certifications, these kind of protocols, and this is the kind of input data sanitization checks which should happen. And finally, the information rights. We are all, not all, most of us are skeptical about tax officers, conducting the search, investigations, raids, accessing digital social media information and sending in notices, using social media as evidences. Then our WhatsApp chats are also accessible in a search under the income tax law in a recent amendment. So all of these things brings us to a very important point. What is the rights which we have? Suppose, hypothetically, that today we hear that the tax administrators have access to so much of data, they're using that data to identify risky transactions and issue notices. Is that, under the Indian principles of natural justice, being a democracy, fair? Can we question them? Can we check whether that was valid? Because sometimes these news briefings, which are AI generated, could be wrong, and that could have a significant reputational damage for that organization. So information rights is a very, very important area where we need to look into. OECD again has been doing a lot of policy work and has set frameworks encouraging countries to participate and try and come up to some kind of policy in terms of how the information should be shared between regulators, how taxpayer information should be protected. And on the lighter note, if a tax administrator and the taxpayer are arguing and their machines are arguing, I think whose data is it will also be difficult to identify, because that's the volume of data which is being computed, and now there are two machines playing around with it. So how will we evidence, and really whose data is being referred to will be a challenge of the future. I wouldn't say this is a distant future. Would anticipate that in a couple of years we will start seeing some of these trends coming in. Risk versus governance. Strongly believe that as tax professionals, our roles are going to expand into governance and identification of risk for organization. Just in the context of AI, it's like a black box, right? None of us truly relate to what OpenAI does, how ChatGPT generates information, where did it learn from, is it right, is it wrong, right? All of those. So we are relying on our own intelligence today to say whether what we are reading in an AI generated output is right or wrong. But how all of this is happening, and as generations move on, will they have the knowledge to even to check whether what is AI generated is right or wrong? And therefore the risks of transparency gaps, decisions without clear reasoning comes in. That, imagine, GST 2.0 requires us to pass on the rate reduction benefits on the price. And, one of our learned professionals of the previous panel presses a button and tells AI, please just change the prices across, right? Now, what happens to that, right? Is there a reasoning which was factored in? Is there interpretations like Badri was trying to raise that give some other product with the product and somebody takes that call? Systems take that call? So how is transparency going to be managed or controlled? AI hallucinations, as all of us know about it, that whenever we use AI, whether we use ChatGPT, Gemini, or any form of these systems, there is hallucination. There's always a risk of false outcomes coming through. And if we are not alert, if we are not knowledgeable, we may be relying on the wrong sort of inference. Data security vulnerabilities, again, a very serious issue or a risk. We discussed that in the previous thing. And the regulatory skepticism. So this is interesting because in a forum where, on a webinar I was discussing where on my co-panelist was a person who practices in Europe. And he shared one experience where it seems the tax administrator was upset because the taxpayer used ChatGPT to make the submission, right? And why was the tax administrator upset? Because he said that this is standard submissions. You're wasting my time. I will, every time I send you a notice, even before the due date, you're getting me the submission coming in, but you're not really giving me the real evidences, right? And therefore, it seems, now I do not know if this is true or not true, but it seems in that particular territory where the tax administrator jurisdiction is, they have explicitly issued a circular to say any AI-generated auto submissions will be looked at negatively by the tax administrator. Right? Now, is it legitimate? Is it, can we challenge that in the court of law? All of that aside. But there is a skepticism, right? And let's understand the burden of proof here. And this is really where, how we gear up as tax professionals. Always to start with, in any tax law, practically the burden of proof is always with the taxpayer to start. We file the returns, whether it's AI-generated notice or tax officer applied mind notice, right? They just raise the questions, right? Even to tell that that question is irrelevant, we are supposed to provide an evidence why it is irrelevant, right? And in that environment, with the quantum of information and data accessible to the tax administrators, and with a skeptical mind, if they are going to run the same audit procedures under any tax law, I think it's an area for all of us to worry. And that brings me to the concept of governance, right? That from a slightly technical here, but I think people investing in technology processes have to factor in how AI is going to be explained. And there are technical sort of concepts of explainable AI and how these logics and algorithms run. And that becomes a very important area when we are approving projects involving AI. Codified business rules. We need to address the hallucinations. We need to say that these are the outliers and we need to define certain business rules. You need to use the prompts in those AI engines to say any skewness or exception beyond this will need a human in the loop. Automated audit evidence, I think this is a simpler one, where if you have followed the first two and you have documented it, then you will know where to look into to find the backups to prove that the process is relying on what form of input and therefore why the output could be relied upon. Governance frameworks, structured oversight and accountability, because now with AI systems, just like in the current world also with cloud-based systems, access rights is always an issue. Now with AI, what kind of information so let's say I have an AI bot which I am authorized by the organization to use, another colleague has another bot which he's authorized to use. How are we ensuring that the information which I am supposed to have and which is privileged, which is not supposed to go to another colleague of mine, whether the AI bot is sharing that or not sharing that? And I think these are things which can be controlled, but it needs the same first principles of how we would have looked at governance structures in organization. So where is the world headed towards? Obviously, governance, explainability, and audit trails are the non-negotiables. You have to look into it. I think even the kind of technology experiences we've all seen in our respective experiences have shown that we have to focus on these. But I think the thing which worries me or makes it interesting also is how policymakers or how organizations are going to look at AI as it connects to external world. Because a lot of the AI use cases we are hearing today are internal, within the organization, how AI is being used for productivity improvements. Now, as technology progresses and we start using AI for other functions, we are going to have issues of data, and cross-border issues will arise. With the current geopolitical scenarios, right, localization will become a very, very critical part of negotiations between governments. And we are already seeing this. From what I hear, a lot of countries, I mean, people who follow AI would have, the Chinese LLM and the US LLM are sort of trained with different data, have work in different algorithms to give outputs which those respective governments want to share with the world. Sometimes there was this meme which was floating around in the social media that if you went to, sorry, I'm not able to recall the name of the Chinese LLM, DeepSeek, yeah. So DeepSeek, if you go and type, is Arunachal Pradesh part of India, it can give you a wrong answer, right? Now, these are challenges which we have. And in parallel, we understand India is also investing in its own language models. It's training them with cultural history of our nation, a lot of policy things about our nation, and I'm not sure, and I would love to separately speak with PVS sir because he's the most experienced in my mind on these aspects. But if history of tax in the Indian context is used to train the AI models, whether we are going to be better or not better. But that's the fear which is there. Standardization, personally don't think there's much going to happen there. I think it's something which is floating around as a concept, more to make us less anxious. Practically, I genuinely can't imagine how you can standardize, because if you standardize, then it's process automation and not use of AI. Openness of AI, it's again a concept which OECD is advocating, and therefore I think they're trying to bring in a hybrid year of standardization and keeping AI intelligence evolving, is they are talking about open weights. So which they're saying that when AI systems are being used, it will represent what kind of weight or factors it's sort of giving, what degree of weights. And there'll be technical experts who can understand those weights and therefore infer as to why certain outputs of AI is, stating an outcome in a certain manner. So this was the regulator side. Just moving this approach into what the taxpayers can look at. I sort of have titled it as the fourfold mandate of tax. Compliance, which a good degree of automations have come in, surely in GST and in most tax laws, compliance functions are integrated to ERP systems, and that is moving well. Analytics, where real-time dashboards and predictive insights are being shared in order to improve the tax function and be more participative with the business. Counsel, which is the interpretation issues, which was again in the previous discussions rated as an area of concern for people. Technologies like Gen AI, etc., will help you at least determine what are the possible alternate views. I wouldn't rely on Gen AI for which is the right view, but I would surely rely on Gen AI on what are the possible views. And I think that itself brings in a lot of efficiency in thinking, a lot of assistance in anticipating how a tax policy decision should be taken. But the most important piece of this 4 buckets which a tax function should work, in my mind, is control. Because, quote unquote, the tax function has always been looked at as a compliance function in an organization. Tax professionals are not given control, right? But with the way the regulators are moving and with the way technologies are moving, I do genuinely believe that there has to be an element of control and a mindset where we understand how data flows, what is the integrity of the data, how it translates into the tax function, is something which tax professionals are able to relate to, understand, and therefore indirectly control. So this would be the way a taxpayer or an organization should probably be looking at this shift. It's not going to happen overnight. It's taking its time, but it's not also slow. Every technology shift, if we observe, has been faster than the previous one, right? Internet, came in after several years. It took maybe a decade or 2 decades to disrupt business models, and then mobile was much faster. It disrupted a lot of things much faster than just the internet. And similarly, AI was going to do things much faster than what mobile enabled. something, very, very important I mentioned, and it's not because I'm a tax professional I'm stating this, but the board needs to give the tax function serious attention. Because if you fundamentally look at it, a lot of the organizational intelligence is accessible outside the organization through tax returns. And a lot of pattern analysis can be done using AI. If AI can be used to identify shell entities, fake invoicing, AI has the computing energy to do competitor analysis also. And therefore, it is very, very important that the tax function is looked at more strategically. Data is extremely critical. Public scrutinies, the kind of examples I've just shared, is a reality. It's being used right now to catch fraudulent taxpayers and fraudulent transactions. But what stops anybody to use it for different other elements? And therefore, the board ownership over how AI is being introduced in the tax function becomes extremely important. Just taking a step forward, all of this could be a little overwhelming and sometimes fascinating to hear stories of what AI can do in our lives, and sometimes worrying. But the way I sort of relate to it is, my wife tells me, don't allow your daughter to use ChatGPT. Her mind will not evolve. And then I recall, I used to tell my dad, please use WhatsApp. It's easier to connect with you. Till date, I do not know whether I was right then or my wife is right today. I think it's evolution of mankind is the way I see it. And I think we all have no choice, because fundamentally, on a lighter note, this is Kali Yuga. Materialistic desires will matter. Technology is reducing costs. Technology is making life easy. AI is going to be attractive and fascinating. So there's no use trying to run away from it, right? It's about how we can manage it. And obviously, there will be pressures on business heads and tax heads to use AI for productivity improvements or governance, etc. So I thought it's important to look at it in sort of 4 stages. You look at it as an exploration, which is basic use of ChatGPT. For all you know, whether we as organizations introduce this step or no, our colleagues are already using it without we knowing. Integrating it with organizational data, protecting the organizational data. This becomes the next step. Embedding it for the governance functions, and then looking towards transformation. All of this, again, high-flying words, very fascinating stories. But what is important for us to understand is, where are we on this curve? And the most important question is, how much will it cost us to move to the next fascinating step? I think this is where, again, the tax function needs to have an understanding of AI, not jump into saying I need to introduce AI. We need to identify use cases which gives us immediate outcomes, right? And then step by step move towards introducing that technology into the organization. Because the cost of having a full-blown AI system integrated with all the data, ensuring security and governance protocols can be very, very steep. And it just doesn't make sense to incur that kind of a cost if the risk is not that high. So I think, again, it comes back to risk and governance, that is the risk of a certain function or a process within the tax vertical critical enough to impact any of the organizational objectives, and then should it be prioritized? As we look towards technologies and AI, just wanted to clarify 3 sort of terms which technology professionals could bring to us. RPA, which is robotic process automation. This, I think, has been around. Large organizations have done it very well, and it's been around for quite some years, more than 5 years in my mind. And these are basic things that there are use cases where the input data you are very sure is clean. You know what is the analysis to be done. You know the outcomes, and you're writing a software code to just do that automatically. Next is machine learning, which is pattern recognition, right? And machine learning basically detects patterns, but you can never rely in terms of saying that is that pattern outcome going to be the best. But what it helps you is with predictive analytics. Because it sees an historical pattern, it helps you analyze and say, in future, what are the alternatives you could look into? Then comes Gen AI, which gives you, direct responses to notices. It simulates a lot of scenarios for you and creates those strategic recommendations. Each of these 3 technology aspects have different relevance when it comes to the tax function. If you're looking at introducing technology for a compliance function, I would tend to believe it's going to be closer to the RPA processes. We may use elements of AI for data extraction from certain reports and things like that, but primarily this is going to be process automation. And it's also important for us to keep this in mind. So looking at this, I was thinking about my own career ahead and what kind of skill sets should we be looking into. I think, the role evolution will be that tax people who are doing compliances and managing processes have to now start thinking about themselves as data architects. They need to look at which data is coming from which finance process, finance function, and they need to lay down the architecture of the input information. Reviewers, I think, there it's going to be how they handle exceptions. So this is a tricky part because most of us have learned a lot of things in our careers by practice, by basics, and then reached certain managerial and leadership roles. So we know what it means at the grassroots level when a decision is to be implemented. Now, the next gen may not even get that visibility. Right? And therefore, how will they even identify the exception becomes a very, very, very critical issue. So reviewers are going to be scarce in the future, but they are really going to be your exception, people who manage or handle the exceptions. People who respond like, tax professionals, advocates, I think they are going to continue looking at the legislation and giving the counseling around, what will be the impact of a regulation for the organization, what policy advocacy should be done, how tax administrator responses should be handled. And that sort of brings in new skill requirements for tax professionals, data fluency, technology integration. We don't need to know how to code, but we need to understand what is the code doing, right? And I think that's a very important responsibility on us. Strategic foresight, because as of today, as we agreed, the regulators are ahead of us. So how are we going to anticipate some of these challenges and misuse of data patterns which the regulators may infer, and the narrative building. With all of this, and typically with technology, with AI, most of us tend to believe that it's too complicated, and if you have to explain business models, we struggle. And therefore, one of the other skills will be that, narrative building as to, where we are using data, what does the input information into the AI system means, why has it been designed in that manner. So a lot of that narrative thing. So the role of tax professionals is sort of going to get elevated towards the decision making and advocacy. And this is a shift which we are all going to see. Maybe the impact of it will be seen more visibly in a few 3 to 5 years, but it's a trend which has started. Finally, we agreed that there is a board level relevance, or rather, I propose that there should be a board level relevance on AI, and people in the board should take it with that seriousness. What's the call to action? So accountability is critical if you're investing in technologies like blockchain and a lot of the process automations. How are we tracking the evidences to present in tax litigation becomes a very, very important area. How are the access rights being defined? How is it being integrated to various systems of the organization? On a non-GST sort of theme on transfer pricing, the functional analysis interviews and roles of professionals, in permanent establishment issues, tax office looking at a LinkedIn profile and saying, there's a sales function in India, right? Just imagine how much of that is easily accessible when these systems come in. So the accountability part is very critical, and to trigger that accountability, I think the call to action will be about what kind of investment in infrastructure is required. And that takes me back to that we need to plan on the ROI, that is that infrastructure investment worth for our organization today, or can it be postponed till the costs of those infrastructure come down. Transparency, which is how it's going to be integrated across functions. So they are real-time dashboards which are providing us insights which are telling us what positions the organization is taking. Imagine, 10 years of tax representations and tax orders helping you analyze and say these kind of disclosures are likely to trigger a tax scrutiny, right? Now, these things are going to happen, and maybe it can happen, and if you're able to integrate it across regulations, then it's going to be even more sharper. Now, this means that there has to be, again, a collaborative effort of professionals across the organization. And that, again, has to be authorized by the board, because the integration or the collaboration needs to be with the approvals of the respective sort of functions. Finally, the strategy part, I've been mentioning this the last few times, that yes, with AI, a lot more deeper simulations can be performed, lot more scenario analysis can be undertaken, whether we are preparing for a litigation, preparing for a pricing model, whether we are looking at passing on rate change benefits, we are looking at cross-border scenarios. Surely, beyond doubt, AI is helping with those scenario analysis. How much of that scenario analysis, the system which we are using, the hallucination can be controlled? How much of that is basis the data which our organization has, right? That, I think, will again come to a factor of how much capital can be deployed for those functions, and is there an ROI on it. So with that, I'll sort of come to the end of my session to just state this line, that AI and blockchain will transform tax, there is no doubt in it, right? But only professionals can transform how businesses will use it. I think as a technology, it's here to stay and it's here to disrupt. Business models are going to arise, and as tax professionals, we need to gear up as to how we make them relevant for our businesses. Happy to take a few questions, but that's all I have for the day.
Thanks, Vishnu. And I think one of the most relevant topic, I think all of us should definitely invest time and learn this. I think it is definitely a must. It is before business as usual now, right? So, PVS, if you can give a momentum to Vishnu. Yeah. Yeah. Thank you, Vishnu. I'll call upon Prashant to come and summarize and give vote of thanks.
So, thank you, Venki, and good evening, everyone. So, while Badri says this is the most difficult job to do, because we need to be alert throughout the day to see what the panelists and the eminent speakers have mentioned. But I think it was very easy today, because there is a large amount of consensus on different aspects that we discussed today. While this session was initially thought, Badri, to cover our journey of 8 years on GST, we never had this GST 2 in plan when we initially thought about it. But I think this was an opportunity for us, because in the right time we also got GST 2 reforms coming in, and then during discussion today we also spoke about the GST 3. So I'll quickly sum up it into 3 parts. The first being, so far what we have seen in the GST, the 8 years, I think there's a large consensus to say that the GST has achieved most of the objectives which were envisaged when in 2017 when the GST was rolled out. To name a few, most of the cascading effect has been taken out, and uniformity of rates across states, as well as transparency because of the digital, the large amount of digital tools and the infrastructure being used for the implementation, and most of the refund and other processes has been eased as compared to the previous one. So if you look at ease of doing business is a relative term, like we need to see whether we are better than yesterday. I think definitely yes, as we compare it with the legacy multiple tax laws that we had. So we are definitely better under GST. So that's the larger consensus, both the industry leaders as well as the practitioners agreed, including DPN sir, who was part of the entire implementation. So there is a large consensus on that part. Moving on to the GST 2, I think the second aspect that we spoke about, the proposed reforms that we have on the table. Many of us are working through this as we discuss here, because there's a lot of things to do, more from operational side, a lot of clarity to emerge. But largely, I think the rate changes are very welcome from all the sectors, including the business, including the consumers. So everyone is appreciating the rate changes. And as Mr. Balasubramanian spoke about, there are structural changes, the rates, as well as compliance process, and ease of doing business. These were the thought process of the government when they came up with these reforms. I think as of now, like we had large consensus on that as well. While some of the apprehensions which were raised both by the practitioners as well as the industry leaders are how are we going to deal with the inverted duty? Because while the exemption may be good from optics, or the lower rate may be good from optics, but if we have restricted credits, then that may not serve the complete purpose. So those are the things that we need to navigate as we progress in this journey. And other couple of things or apprehensions raised, like previous sir mentioned about the practicability of this provisional refunds being talked about, and also on the GStat, right? So what's the uniformity that we can expect considering the state involvement across multiple benches, and as the industry leaders spoke about, like how are we going to manage if we have 50, 60 registrations, and whatever the problems that we are facing today in the audit, if it multiplies into the tribunal. So we have different tribunals in different states giving different rulings on the same matter. So that's going to be a challenge that we need to navigate. Having said that, I think overall it's a welcome step, and as everyone mentioned, especially we heard from both DPN sir as well as Mr. Balasubramanian that it's a journey, it's not a destination. So we also spoke about the GST 3, or in fact Mr. Pramod Jain mentioned that some of the aspects maybe we can expect it as 2.25 itself, not 3. So there are some things which we can start working up on, making additional representation to prepare for the next reforms, which are mainly around addressing the inverted duty structure and the credit accumulation issues, as well as the main thing coming out from everyone is the blocked ITC, removal of 17.5. That's something which everyone spoke about. So that will be the next big thing that we need to push as a industry body representation. And the biggest other reform that we are looking definitely is the central authority for both audits as well as the refund mechanism, because it's becoming complicated day by day. Same issue, same tax position being treated differently in different states, and within the states treated differently by different tax authorities, that the CGST is treating it different and the SGST authorities are treating it different. So those are some of the GST 3 items that we need to focus and make proactive representation. And as mentioned, we definitely have a very proactive and listening department where we can go with our concerns, and there is a two-way communication in terms of hearing our concerns. So let's make use of it, and let's move towards the next reforms in this journey, basically. So that's it on the sum up side, and now the time. Badri, any questions to be taken? Nothing. Okay. Okay, so the next part is to thank all the contributors for this seminar. So first of all, I would like to thank Mr. Balakrishnan, who joined us virtually. Even though he had a very, very hectic schedule, I know, I think it was only possible because of, like Badri was mentioning, because of the connect that Mr. Balasubramanian has with the BCIC as well as all of the tax expert committee members. So thank you very much for Mr. Balakrishnan. And we had a wonderful first panel covering DPN, Shivdas, and Mr. PVS. So thank you very much, sir. And it was very insightful. Thank you for sharing your experience and thoughts. And we had a handbook which was released covering the legal outcomes or the legal precedents under GST. Thank you, Siddesh, Mukesh, Banu, and Raghavendra for all the contributions. And we had a very good second panel covering Mr. Sriram and Pramod Jain and Mr. Shiv Kumar. So thank you, all the panel and the moderator, Badri. And last but not least, I think the very relevant topic, the AI, which is covered by Mr. Vishnu. Thank you very much, Mr. Vishnu, for covering that very relevant topic. And I would like to thank all the BCIC office bearers and secretariats for their support. And more importantly, all the participants, because in this era of virtual seminars, I think we saw a very overwhelming participation physically by most of, I would say it's a houseful seminar. So thank you very much for all the active participation. And I would also like to thank our event sponsors, Shivdas and SDU. So thank you very much, and looking forward to see you soon on an important topic. Anything?
Yeah, only one.
Yeah, please.
So there is a memento to be given to the event sponsor, Singvi Dev and Vani and Badri. No, come. It's good. And PVS, if you can do the honors, please.
Thank you.
Wonderful.
Wonderful. Great. What a thanks for sponsoring.
Thank you everyone. Thanks for the patient hearing. Badri. Yeah. Yeah, we have the high tea now, tea, coffee. Please make yourself available and please feel free. Thank you so much.